everyone is getting really bullish, and this is what the market is best at doing, is getting everybody really bullish again and get them sucked into the market just before it rolls over and goes off a cliff. And we're seeing big distribution selling. And so the institutions are unloading into this buying pressure.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for May 5th through May 12th, 2025, while supplies last. First this week, we feature 10-ounce silver Royal Mint coins at just $2.99 over spot per ounce. The 10-ounce Britannia, 10-ounce Royal Arms, 10-ounce Little John, and 10-ounce Merlin are all 4 nines fine, and we have a very limited quantity. Again, they're just $2.99 over spot per ounce while supplies last. Next, backdated 1-ounce gold Canadian maples are only $69.99 over spot. And finally, backdated 1/10-ounce platinum UK Britannia are just $29 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Always a pleasure, Elijah.
Well, it's great to have you today. I did want to discuss the precious metal markets first and foremost, as we're seeing quite a sell-off in gold, not too much in silver. So I find it interesting over the last few months how it seems like there's been this divergence in price action between gold and silver. Normally they trade pretty in sync with each other, but today we're seeing gold down almost $100, but silver not that much. What do you make of what's happening?
Yeah, well, I think gold was a little bit of a crowded play. I think the whole kind of world economy, when they get nervous, they move to gold. So that is, that's where I think a lot of emotional money has been moving, and there's been a lot of FOMO. A lot of people I talk to who aren't in gold have been painfully watching it go higher, and they all want to get in. And so I think we're just seeing some profit taking. We've had the news with the tariffs, kind of another delay, a pause of tariffs. And so that is strengthening the U.S. dollar. The dollar is going up, so gold's falling in kind of the inverse relationship. So we're just seeing, I think, some profit taking, people moving out of that play, thinking there might be some good news that come out of the China tariff deal down the road. So I think it's just that everybody who piled in is now nervous, and now they're kind of quickly pulling back the reins. And whatever moves up the most is usually the one that pulls back the most. And gold has definitely been outperforming. Silver has been struggling, and so that's I think the reason for silver really just holding its ground today, while gold kind of takes a bit of a beating.
Now, if we look at the charts, what is your technical what is your pulse on the gold market at the moment? And do you see further sell-off coming?
Yeah, I mean, if we take a look at the gold market, if we pull up gold here, gold has had a very nice move. It's recently pulled back. We've been slowly kind of actively trading this. We did get into a gold trade. We closed some out a few days ago, and gold has kind of is having a pause. This is a significant level. Gold could still consolidate here and move up based on the charts. Gold has the potential to rally to $3,750, which is a substantial move to the upside from where we are right now. That's somewhere up to this range. So gold is in a bull market phase. You don't want to bet against it. What's really interesting, Elijah, is when we look at the monthly chart of gold and kind of zoom out on the big picture. I think you and I may have touched on this before, but I use Fibonacci extensions, which is the golden sequence, to identify where price targets for gold are to the upside. And we've hit multiple 100% measured moves in gold over time. And these levels that I'm drawing are kind of where gold has hit rough Fibonacci targets. And what's really interesting here is each time we've hit a target and then gold has blown past it and become that kind of crowded play where we really just see it kind of drift higher and move up. Each time it's done this, including the big one we've seen right now, has been about 22 to 24% move to the upside from the 100% targets we were looking for. And so I find it very interesting that each time we've done this, we've gone into a multi-year pause or a financial reset. And it's not that everybody in the world is like piling into gold. It's actually, a very tiny percentage of most portfolios, most advisors. But the thing is, people who do hold gold right now, they know we're in a bull market phase and they don't want to sell it. And so it doesn't take much buying for gold to just quickly drift higher, because anybody who has it says, well, I'll sell it to you, but give me, pay me through the nose for it. And so that's why we see gold in these phases here drift higher very easily. So I am, based on that, short-term wise, as I told you, I think there's potential for gold to maybe push a little bit higher. But overall, based on historical price action and percentage moves, it is indicating that gold may have actually kind of had the top here, and we're going to see a bigger pause and correction with the overall economy and the stock market, and pull back and give us a pause. The last time we've had a pause like this, where we went into an economic kind of crisis and a financial reset, was in 2008, and gold pulled back about 34%. So in a perfect world, that's what we'd see here. We see gold pull back with the stock market over the next 4, 5, 6 months, and then gold would probably be off to the races after that. So short term, you don't want to bet against it. It's still bullish, but when you look at the big picture, all the signs are there, including these monthly charts, these candle wicks. If we just zoom in, when price runs up and then gets slammed down and then runs up again and gets slammed down, that's usually a sign that the market is a little bit exhausted. And the big question is this an exhaustion move and it's going to break down and unwind like I think it might? Or is it just a pause, a consolidation before it pushes up for that next leg higher? And that's the nice thing about technical analysis, is we follow price. We don't pick a top or a bottom. We just wait for a trend to start or continue, and then we jump on and trade that. So I'm still bullish on gold, but you got to be aware it is in definitely a unique situation of, there's limited upside and potentially more downside or wasted time if you were to move into it right now. It could take a little while to mature before it has the next big leg to the upside.
Now, you mentioned how the stock market might be in its topping phase at the moment. We've talked about this on our last interview and interviews before as well, that you do see a crash coming in the stock market. It seems like we're seeing a rally, though, at the moment. Today's stock market up about 2.5%, and we're really only, a few, maybe 5% from all-time highs. Do you anticipate another leg down soon? What do you make of this, a recent maybe dead cat bounce, some people would say?
Yeah, and there's a lot going on in these charts, and I've been talking about this for a little while here. This previous high that we've seen on the S&P 500, it's the same on almost every sector, and even the NASDAQ. This pivot high was talking about the market is going to want to try to run and break through that. And if it does, it's going to create a short squeeze. So everybody who's bearish, betting on this market rolling over and selling off and profiting from falling pricing, well, they're going to want to get out, because that is a major resistance area. And today's news it's got everybody feeling really good. People went from thinking we were in a super bearish, markets are going lower, to today a pop-up on news with tariffs, and now people have completely flipped the script, and they're like, how long until we've entered a new bull market? Like, is it going to start this week or next week? And things are all good, the tariff stuff. So that it's a big warning sign, and there's a few really interesting charts to kind of share here based around this. If we take a look at let's take a look at this chart. So the top chart is the S&P 500 monthly chart, and the bottom chart is the same, except for it's where we are right now, 2025. And if we look at what happened in 2008, where the stock market put in a top and then sold off 57%, when we had that first big break to the downside, we saw this blue line spike. And I've overlaid the Google search term bear market of people typing it in, searching. And we've just seen the same thing last month, where the market had its first big crack to the downside, we saw the first real wave of true panic selling. The stock market crashed with 4 days of panic selling. And, if we actually take a look at gold for that exact same time frame, and this goes to show why most commodities and everything are directly linked to the stock market. Those 4 days of panic selling were these 4 days for gold. And as you can see, when there is bear market type selling, gold gets pulled back with it. So if we do enter a recession and the market goes into a bear market and a financial reset, I believe gold is going to have a haircut and go lower. But what's really interesting is we have this same spike right now going on of people searching for a bear market. And it's funny, you look online and so many people are saying, well, everybody's searching for bear market. Everybody knows one is coming. That means it's not going to happen. They've already sold and now they're getting ready to buy. But it's not the way that I see these giant cycles, as you and I have talked about, these stages that happen through the market, Elijah. There's 4 stages that you and I have touched on. And more or less, we're in a stage 3 topping phase, and then we're going to go into a stage 4 financial reset. And this is a financial reset is usually global. The whole world suffers. There is no stopping this tide. When the tide is going down, just because we know it's going to go down at a specific time, doesn't mean it's not going to go down because we know it. It's a tide we can't control. And this economic tide, I think, is slowed. And now we're going to see the economy sell off. And just as you mentioned with a potential bear market rally, that's exactly what I think is happening. When we look at the stock market, this is the weekly chart of the S&P 500. We have bullish environments, bearish environments in 2022. We've now entered another bearish environment, and we're having this dead cat bounce that I believe will eventually roll over and sell off, and we could see a pretty big wipeout. And it's this sell-off here that will suck precious metals down temporarily and give everybody a great opportunity to get into the precious metal space even more and watch it start to take off. So that's my take on where the stock market is and how kind of it relates to where gold is.
Now, what do you see happening in silver in this environment? Because I know silver can often sell off more dramatically than gold in a downturn, but we do see, gold is a little bit maybe more overbought at the moment. It's increased so much over the last year when silver, it's still around 100 to 1. Gold is still about 100 to 1 ratio to silver. So it seems like maybe silver doesn't have as much to sell off. What's your take?
Yeah, percentage wise, it usually falls a lot sharper than gold. Like you're looking at least twice as much. It'll probably fall as gold percentage wise. So it's not immune. It's an even smaller market. Once panic selling hits and there aren't people looking to buy it and everybody wants to sell it, it drops like an elevator shaft. As you can see, it takes a staircase up and then the elevator down. It'll do the same thing eventually. If we do go into a financial reset, it will get wiped out and brought down back to some very, very, I think, critical levels. I think we would see it back down in the low 20s, which would be a great opportunity in the grand scheme of things. We zoom way back on the silver chart. As you can see, it is a rough ride. Whenever there's panic selling in COVID, we saw it sell off very sharply as well. It creates these short-term opportunities down like 30, 40%. So I believe we could see it back down in these low 20s. And just because it's holding up, as you and I are speaking today, while gold is crashing and falling like 3%, doesn't mean it's immune. It will eventually have selling pressure and the bottom will fall. And it'll become an opportunity to accumulate and stack, build more stacks going forward.
Now, as for a time frame on this, I mean, with the stock market bouncing at the moment, do you see this happening within the next couple of weeks, or what is your outlook for the next leg down?
Leg down in the stock market or in precious metals?
I guess both, because it sounds like they're going to probably happen at the same time.
Yeah, so gold and silvers generally should hold up a little bit. The gold may still want to push higher as the stock market here struggles. I think in the next 1 to 3 months, I think we could see the stock market really stall out and start moving sharply lower. And once it starts to pick up speed to the downside, that's when that fear is going to start to ramp up, and then precious metals will pull back. So we are still in a sweet spot where gold and silver can hold their value and move up, even if the stock market starts to sell off here over the next month or so. But eventually, when the fear hits a certain level, everything kind of gets sucked down with it. So I think we're within a month or three window where you got to be aware that both stocks and precious metals could be falling precipitously together.
You mentioned the news today about a tariff deal between the U.S. and China, and I think this is really interesting. You're still looking for a huge stock market correction here, and that kind of gets to the idea that maybe this tariff thing was just kind of the catalyst for this crash, or the excuse for the stock market to sell off, but not really truly the fundamental reason behind it.
Yeah, I think it kickstarted things. Things way before this, and you and I have talked about this for months, well before all this started, is everything that I follow, from the technicals of different money flowing between different assets and different commodities, all the way to like real estate and economic data, has been showing to me that it's been slowing. The tide has changed. It's gone from, strong economy to a kind of a sideways weak economy, and I believe everything now is sloping down in terms of all that kind of data. So things were slowly breaking down and weakening. And then I think the whole tariff thing was just enough to kind of, snap that trend and kickstart that first drop. And so now the markets are trying to claw their way back up. And the news that we have going on right now with the China and the US, this huge pop in the equities, is sending price up towards 150, 200-day moving average. It's broken a previous high from a month or two ago. Everyone is getting really bullish, and this is what the market is best at doing, is getting everybody really bullish again and get them sucked into the market just before it rolls over and goes off a cliff. And we're seeing big distribution selling. Institutions are unloading massive volume in overnight trading. Stock market was trading higher overnight. We keep seeing big bouts of high volume selling on the futures markets. And during regular trading hours today, the market's getting hammered. And then with big selling, and then they let the market drift higher. Retail buyers think we're starting a new bull market. And so the institutions are unloading into this buying pressure. And this news is exactly like what happens to the average investor. It gets them all excited. They get long, and then the market reverses and crashes a few days later. And they're like, how did I just buy this high again? And the market's falling. So that's what people need to be aware of. And we're seeing it on even our custom indicators. It tells us that there's FOMO in the market. If people feel like they're missing out and they don't care what price they pay for stocks, we have that spiking today. And every time we see that spike, the market takes a pause or pull back. And it's a warning sign to be very cautious.
It does seem like a lot of the big money is moving out of the stock market, as you mentioned. Even like Warren Buffett having a huge, $325 billion cash position with Berkshire Hathaway. So your perspective on that? Any other signs that the big money seems to be exiting the market at the moment?
Yeah, I think Buffett's probably got a pretty good team of what's going on. We've been raising cash for long-term investing account. We're all cash. I believe inflation is here to stay for a while. I think it could go up. I think interest rates are going to hang in tight where they are, or push actually higher and kill the price of bonds. So you don't want to hold bonds. I think there's a lot of downside risk there. I think one of the best plays, one of the most boring plays, is simply holding a cash position, earning 4%. If the markets have no real clear direction and there's crazy volatility, as a long-term investor, just sitting on the sidelines, earning interest, even though it may be lower than inflation, it's way better than losing your shirt and giving back 20, 30, 40, 50% of your wealth, and keep that gunpowder dry. So once we do have a pullback and correction, you can load up on gold, on silver, on the companies that you like, and then take advantage of it. So right now it's more so capital preservation, just like Buffett. Cash is a position, even though some people think it's not. And if you don't think cash is a position, eventually you're going to take a hit, because you're going to be invested in stuff because you don't like cash. And pretty much everything goes down in a financial reset. And then you'll regret, why didn't I just step aside and, keep earning interest instead of losing everything?
May have touched on this last time, but your perspective on the current gold silver ratio, and do you think there's any trading to be done there, or do you anticipate that, the gold silver ratio, if both metals fall, still it's going to go higher from here?
Yeah, I don't use it for positions or anything like that. I always follow the long-term charts, like the monthly charts of gold and silver, to identify what to get into. So I would think naturally silver will fall a lot more percentage-wise, and I think we'll see this gold ratio stay high or go higher, which is, I mean, in the long term, I think it's a good sign to own more silver. But overall, I don't use it towards any trading. I wait for the asset I like to carve out a bottom, start to trade up and trend up. And then I'll be like, okay, how much do I want to put into silver? How much do I want to put into gold? And then I just kind of go from there.
And last topic I did want to touch on is the dollar index. I know we were below 100 for a little while there. Now it's popping back up. Some people were very concerned about that 100 level being broken. But now that it's above that again, do you see any more weakness in the dollar coming?
I've been pretty bullish on the dollar. I mean, it's been beat up from the tariffs, and a lot of, I think, investors thinking it's putting the U.S. into a worse position, and who knows, it probably is or has or done, or I don't know what it's going to do. But in the grand scheme of things, I think the president is trying to make America great again, or strong, and he's trying to level the playing fields with tariffs. And I don't know what is right or wrong. I mean, it's a huge game. In order to make things better, sometimes you got to make things worse to get to where you need to go. But I think the dollar has broken that 100 level. Everybody was watching. It made them all bearish and it spooked them out. Huge volume in selling the dollar futures. Everyone was very bearish. Nobody wanted to own it. It broke a couple very significant price levels on the charts from years ago. And that also created more panic. And that to me is a contrarian play. I think it is, everybody who's wanted to sell it is now out. It's broken. It's flushed the markets. And I think the U.S. is trying to firm up their country and the currency, and I think the dollar could rally here. So I like the dollar. It does look like it's moving up, and if it does, it's probably going to put pressure on gold. And we have seen the dollar rally very significantly during stage 4 declines. Every time we've gone into a stage 4 decline, the tech bubble, the financial crisis, even COVID, we see the dollar shoot higher. And of course, that's not good for precious metals. So it creates opportunity for sure.
Fantastic. Well, Chris, we really appreciate your time today. If people are interested in learning more, they go to thetechnicaltraders.com. We'll put the link in the description of this video. Any last thoughts before I let you go?
No, I think we covered it pretty well. I think everybody just buckle up and try not to get sucked into this potentially this rally and think it's the new bull market. Let it prove itself before you jump in up here.
Sounds good. Chris, thank you so much for your time and God bless.
Thanks, Elijah. Take care.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for May 5th through May 12th, 2025, while supplies last. First this week, we feature 10-ounce silver Royal Mint coins at just $2.99 over spot per ounce. The 10-ounce Britannia, 10-ounce Royal Arms, 10-ounce Little John, and 10-ounce Merlin are all 4.9s fine, and we have a very limited quantity. Again, they're just $2.99 over spot per ounce while supplies last. Next, backdated 1-ounce gold Canadian maples are only $69.99 over spot. And finally, backdated 1/10-ounce platinum UK Britannia are just $29 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.